Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 6th, 2025, and we're diving into Clorox's latest earnings report for the third quarter of fiscal year 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Clorox has certainly had an interesting quarter, and I'm excited to break down the details with you.
Revenue and profitability overview. Let's start with the top line. Clorox reported net sales of $1.67 billion for Q3 2025, which is an 8% decrease compared to last year. However, the gross margin increased significantly. John, can you elaborate on these figures?
Absolutely. The decline in net sales was primarily due to the divestitures of the Better Health VMS and Argentina businesses. Despite this, Clorox achieved a gross margin of 44.6%, up 240 basis points thanks to cost savings and benefits from these divestitures. It's also worth noting that their net cash from operations nearly doubled to $687 million, indicating strong cash flow management.
And what about the earnings per share?
The adjusted EPS came in at $1.45, which is a 15% decrease from the previous year. This decline is mainly due to lower net sales, although it was partially offset by the improved gross margin.
Segment performance. John, let's break down the performance by segment. How did Clorox's different business units fare this quarter?
The health and wellness segment saw a 3% increase in net sales, driven by higher volume in cleaning products. However, the household segment experienced an 11% decline due to lower consumption and timing shifts in shipments. The lifestyle segment was down 3%, and international sales dropped 15%, largely impacted by the Argentina divestiture.
It seems like a mixed bag across the board. What are the key factors affecting these segments?
For health and wellness, the increase in volume was a positive sign, but unfavorable price mix affected the household segment. The international segment's decline was expected due to the divestiture, but excluding Argentina, organic sales actually grew by 2%.
Strategic initiatives and innovations. Clorox has been active on the strategic front as well. Can you tell us about their recent initiatives and innovations?
Clorox has maintained its overall market share despite challenging conditions. They've introduced several new products, such as Burt's Bees Boosted Tinted Balm and new Hidden Valley Ranch flavors. Additionally, they've achieved zero waste to landfill status across all global manufacturing plants, which is a significant sustainability milestone. Their brands were also recognized as some of America's most trusted by USA Today.
That's impressive. How do these initiatives position Clorox for the future?
These efforts not only strengthen their brand portfolio, but also align with consumer trends towards sustainability and innovation. This positions Clorox well for long-term growth, even amidst current market challenges.
Future outlook and guidance. Looking ahead, Clorox has updated its fiscal year 2025 outlook. What are the key points investors should be aware of?
Clorox expects net sales to be down 1% to flat, factoring in the divestitures. They anticipate adjusted EPS to range between $6.95 and $7.35, reflecting a 13% to 19% increase year over year. The gross margin is expected to rise by about 150 basis points thanks to holistic margin management efforts. They also noted the impact of their ERP transition, which is expected to reverse in the next fiscal year.
How should investors interpret this guidance?
While the sales outlook is cautious, the strong EPS guidance and margin expansion indicate that Clorox is effectively managing costs and driving profitability. The ERP transition is a temporary headwind, but the long-term benefits should outweigh the short-term impacts.
Key takeaways. In summary, Clorox faced some challenges this quarter with lower than expected sales, but they managed to expand their gross margin and maintain strong cash flow. Their strategic initiatives and product innovations are promising for future growth. John, any final thoughts?
Clorox is navigating a tough environment with resilience. Their focus on cost management and innovation should serve them well in the long run. Investors should keep an eye on their strategic execution and market conditions.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Clorox's performance in the comments below. Until next time.